Hey guys, so today is Tuesday and today was actually a really good trading day for me. We'll always start on a daily chart for our trade recap. So as you can see right here, we are still in basically bullish trading conditions. We are slowly trading higher through the high time frame gaps we have right here. Not the best trading conditions on a daily chart. Still, there is a clear objective, which is higher. So it is actually still valid to trade. What I was looking at is the daily wick right here, basically, which should support the daily chart higher, and also the daily quadrants of the wick right here, which should deliver resistance to NQ. So let's drop to a 1 hour chart, or I think it was on a 4 hour chart. Yeah, so right here we can see we have a 4 hour favorable gap, so a bullish hourly favorable gap, and we traded back into it. And now we should basically see support come into the market with trading back into the gap. And we did that basically within within London. So basically London right here formed the low of the day with trading into the higher time frame favorable gap, and we also reacted off the daily upper quadrant. So therefore we have a quite good resist or support level in here, which should support price higher. We have daily buy side liquidity right here, and yeah, we are still within a bullish market condition. So therefore we look for higher prices. Before we drop, or let's drop to a 50-minute, then we will take a look on regular trading hours. So right here, as you can see, we basically formed our low within the London session, as I already mentioned, and we swept also Asia highs. We basically then swept daily buy side liquidity within our New York open kill zone, which is from 7 to 9 a.m. We did not take out any New York open kill zone sell side liquidity with the opening. So the opening is right here, and we just traded higher and higher into the upper quadrant of the daily wick. And before we now drop lower on a 1 minute chart, I want to show you regular trading hours, because it's really important for my approach, how I want to basically trade on a day. And as you can see right here, we basically closed right here and opened 106 handles higher, so a new opening range gap higher of 106 handles, which means we are not in trending conditions. So therefore we want to see NQ trade back to the upper, not the upper quadrant, but to consequent encroachment, definitely. So more important than the actually consequent encroachment. And yeah, and as you can see right here, we did not trade back to consequent encroachment with the opening. We just traded higher, and later on we traded back to it and then reacted off the quadrants. So let's maybe take a look on S&P. So S&P was a bit different, because on ES or S&P we were a bit stuck. So actually right here we could not really expand any higher. We were just trading basically within the range. So maybe a more difficult day to trade, because we want to trade when both assets basically are aligned, and because they are correlated assets, we want to see that they move basically align higher or lower. We don't want to see that one of them expands while the other one just consolidates or even trades lower. So that's actually a warning sign. But today it was not really affecting NQ, but still not the perfect conditions, I would say. But yeah, it's just what it is. Let's now drop to NQ on the 1 minute chart. Now it's getting more interesting. So as I already mentioned, with 930, we traded just a bit low, and then we only expanded to the upside. And I think still with the 10 AM macro, we could not trade lower. So I don't want to chase anything long in here, because we are already overextended, and we also don't really have a market maker buy model in place. So yeah, of course we do, or we basically have swept Asia lows, and also we know that the London low will probably stay intact because we traded back into the upper quadrant of the daily wick into a higher time frame hourly 4-hour fair value gap. So therefore we don't want to see that we will trade back to the London lows and take them out. So therefore we know actually that the low right here is in play for the day, as it is basically usually that we will form our low within basically trading conditions within the London session. But yeah, we did not take our New York Open kill zone sell liquidity. We only expanded higher, and it was also we would trade against regular trading hours direction if we would take long. So therefore, yeah, the higher time frame trend basically is higher, but we don't want to chase anything in here. Maybe you could have entered right here just for a quick scalp, but that's just not my approach. I don't want to trade anything in here. So basically you have to wait. And even right here, after taking out sell liquidity, I still don't want really to take any trades in here. I measured, so right here you can see the quadrants of the big busy, sorry guys, of the big busy. So the upper quadrant, consequent encroachment, and the lower quadrant, and they also like basically get respected very very well by price. So definitely a important gap we want to measure. And right here we have no resistance because this low is basically lower than the low to the left, and therefore it was reasonable for NQ to trade higher. And then actually something really interesting occurred. So within our London close macro, we had SMT with ES. So NQ formed a lower low, which is basically a sign of weakness. And then we displaced below the down close candle right here. And that's now a mitigation block. And that's only, or the mitigation block is only valid to us if we have SMT, because if we would have formed right here a higher high, that would have been a breaker. And a breaker is way more important than a mitigation block. But because we formed SMT, this mitigation block is valid. And because we have a huge wick, we want to see that basically that price reacts to the wick, because it's the most sensitive price point, I would say. And as you can see right here, we closed below it. We also displaced through the high time frame gap right here, traded back perfectly to consequent encroachment, and then just sold off into the sell liquidity right here, into back to the opening prices, and also into the New York Open kill zone sell liquidity. So that's basically a perfect A+ setup right here, because it's a smart money reversal, basically as a market maker sell model. Why? Because we have the right time. So basically time of interest is the London close macro right here, which also seeks basically AM session liquidity, which is also they're really aligned with the macro, I would say. We also have SMT, as I already mentioned, and we have CSD, which is the change in the state of delivery, and that we basically get with a break of structure, with trading below the order block right here, which becomes a mitigation block. And yeah, what is also really interesting is the fact that we displaced through consequent encroachment of the inversion fair value gap right here. So therefore we want to see the gap which forms at consequent encroachment get treated like a breakaway gap. And in fact we did not trade back to it. We only traded to the fair value gap which formed at the lower quadrant. So therefore we allow price to trade back to it, and then we sold off once more into the sell liquidity. And then more importantly to me today, because I did not participate in anything in here. Today was a kind of stressful day to me, just because of my personal life, nothing really important. Don't want really to talk more about it, but yeah, so I came back to lunch, and as you can see right here, I took some trades. So yeah, we had a really clean reversal model right here. Why? Because if we take a look on regular trading hours, we can see that we did in fact right here actually traded perfectly back to the lower quadrant. And also on a 5-minute chart, we can see that we basically did close above consequent encroachment. So that's really nice to see. basically that price reacts to the quadrant level. So therefore we know with trading back to consequent encroachment, we are now able to follow our high time frame trend, and therefore because our higher time frame trend is still higher with the hourly chart, we can anticipate basically higher prices. So now let's back to NQ. What I was looking at is definitely basically the 5-minute SIBI right here, and also the one right here, and definitely the higher time frame gap. So I was also looking for the upper quadrant of the price range. Why? Because I don't really expect that we will take out the external liquidity right here, because it's a really strong reversal which occurred I don't know, which played out right here. So yeah, we sold off heavily. So therefore our market maker buy model, which is aligned with regular trading hours and the higher time frame, still should definitely reach, or yeah, should definitely reach the upper quadrant of the price range, but not always will we reach external liquidity as well within our trading session. So actually right here with 930 we traded lower and then instantly basically traded higher, so that's a balanced price range. We traded back into it, found support, traded higher. I kind of did not want to chase anything in here. I was more patient. We could basically trade above the inversion fair value gap right here, which was used as resistance first, and then basically after we traded above it, closed above it, and traded back into it, it became support. Also really nice to see that we basically displace through consequent encroachment on the 5-minute chart through on the 5-minute chart we displaced through consequent encroachment of the higher time frame gap. So therefore we formed a 5-minute fair value gap, which has to get treated as a breakaway gap, and in fact we did that. So as you can see right here, if you look at consequent encroachment, the body just did not even close within the gap. So really clean low resistance delivery on the 5-minute chart. It's not as clean on the 1-minute chart as it is on the 5-minute chart, but that's basically that's to be expected. So I entered right here, I mitigated one right here, and that here, so sorry, I got stopped right here. So that was actually basically my mistake I made today. I had once again a really way too tight stop. So yeah, it was below the inversion fair value gap, but yeah, just have to put it a few more points below it and then I should be safe. A bit annoying, but yeah, I know I'm basically right with my objective. So after seeing price close once again or trading above basically the inversion fair gap, I enter once more right here, and I think I added right here as well. We formed, because we displaced here, formed a suspension block, traded back into it, and then could really also expand higher with our lunch macro. So because our setup is already in play before the macro, we want to see that the macro will basically spool higher, so or spool with align with our direction, which is higher because we are trading aligned with the higher time frame trend. And then we traded right here into the 5-minute SIBI and also cleared out the sensor liquidity right here. So we actually kind of retraced a bit too much for me. So I did not want to see NQ trade back to the breakaway gap right here, which should not get traded to if we are in really low resistance conditions. But yeah, because sometimes because the market maker buy model right here is more of a retracement than a expansion, because we're only trading within a range, it can be expected that we have more high resistance. Still, I don't really like it, so I took 2 off right here. And then, yeah, we basically formed a breaker. We had engineered sensor liquidity right here. We traded above it, closed above it, traded back into it, and I added once more right here, because now it was really, I had basically the conviction that we would trade higher. And then we, actually did or had low resistance conditions, displaced higher, and basically also traded into the 5-minute fair value gaps, which we wanted to see NQ trade back into. So the one right here and also the upper one. And I took one off right here. So a really nice first partial. We also had immediate rebalance, so that's perfect to see. So therefore I removed actually my limit order, because I basically was aware of the fact that we would see some speed coming into the market, because we had a immediate rebalance, which is basically our fastest reaction. And therefore I basically took one off right here, and then we traded back into the higher time frame gap, and my last partial was right here, and that was actually the candle which formed the high of the move. So really amazing money management. I'm really content with how I managed my trades actually, except for the stop loss right here. So yeah, since then we could actually not reach external liquidity, but yeah, I think that's actually a really nice trading day. The short right here would have been A+, a A+ setup. The long right here is a good setup. It's not as good as the first sell-off, just because we have a just more powerful market maker sell model, because it's a smart money reversal with SMT, with a really strong CSD. We are trading back basically to all the way back to the New York Open Kill Zone sell liquidity, which is a really strong liquidity pool. Also back to the opening prices. So right here, that's basically more kind of a retracement. It's still a really good market maker buy model, and we are still trading a line with regular trading hours, because we are reacting off the quadrants of the new opening range gap, and we are also trading a line with the higher time frame. So therefore that's still a really good opportunity to take longs. Nevertheless, I would have really liked to participate in the short right here. Also the fact how we delivered within the SIBI right here, how we reacted off the fair value gap right here, that we did not trade back to the breakaway gap, which formed at consequent encroachment. That's really low resistance delivery. That's basically perfect market conditions. Still right here, I just learned as much with trading basically the separate setup right here. So really important day today. I learned a lot, and also obviously finished the day in green. So right here, that was today. Yeah, really nice to see. And I think that's basically it. And yeah, see you soon.